Is it time for a coverage checkup? Most people try to take care and have regular health checkups. But when was the last time your clients had a checkup on their insurance coverage? Over time, needs change, and more importantly, there may be penalties for being underinsured. Improper or inadequate coverage can lead to devastating uninsured losses and unhappy clients. It's important to help clients review their policies and maintain proper coverage. Standard homeowners policies include first-party property coverage for the dwelling, other structures, personal property, or contents, and additional living expenses, which can help pay expenses to temporarily live elsewhere after a loss. Third-party liability for damage or injury to others is also included. Although some may think that a limit to cover the mortgage is sufficient, this can lead to reduced payments in the event of a claim. Dwellings covered under a replacement cost basis must be insured to at least 80% of the cost to replace the dwelling. This differs from insuring to market value. Renovations and upgrades can significantly impact the replacement cost. According to a research paper published by the University of Colorado, 74% of homeowners who filed claims related to 2021's Marshall Fire found that they were underinsured. 36% of those were considered severely underinsured, meaning their homes were covered to less than 75% of the actual replacement cost. Typically, the other property limits on a policy are determined as percentages of the dwelling value. 10% for other structures, 50 to 60% for personal property, and 20% for additional living expenses. For example, if the dwelling limit is $400,000, the other structures limit will be $40,000. Personal property is $200,000 using the 50% basis, and additional living expenses is $80,000. These limits on other structures and personal property may be woefully inadequate. Other structures coverage is an often overlooked area of concern. Other structures coverage applies to a variety of items including detached garages, sheds, barns, gazebos, fences, greenhouses, and in-ground pools. The cost to replace these items can easily exceed the standard limit on the policy. It is a common misunderstanding that the coverage limit only needs to be enough to replace the most expensive structure. This is not the case and can lead to a coinsurance or underinsurance penalty in the event of a loss. Wind is one of the most common causes of loss. A windstorm, hurricane, or tornado could easily destroy one or all of the other structures. With multiple structures, it's important to carry coverage limits sufficient to replace all of them, not just the most expensive one. An important point to remember is that, unless specifically addressed, damage to structures that are used for business, such as a repair shop in the garage or a separate residence, will be excluded under the standard homeowners policy. In addition to checking for adequate coverage limits for personal property, there are limitations on certain classes of property. This usually includes such property as jewelry, furs, and fine arts. Theft is a common restriction for such property, with dollar limitations on the amount of recovery available. In addition, there are valuation considerations and deductibles. Floater coverage is available that offers a valued limit on property such as jewelry, thereby eliminating reductions due to depreciation. Those floaters don't typically have a deductible. Recent years have seen an increase in the number of people who work from home. This presents potential coverage gaps, as property used in business is excluded under most standard homeowners policies. Depending on the type of business, proper coverage can be written as an endorsement to the homeowners or a separate business policy. Additional areas to consider include special deductibles and exclusions. Wind and hurricane deductibles are becoming more and more common, and they are sometimes mandatory. They're often included as a percentage of the dwelling limit, separate from the main policy deductible. While the lower premium associated with a larger deductible may be attractive at the time the policy is purchased, it needs to be low enough for the insured to afford it at the time of loss. Insurance needs change frequently, so understanding how to help clients assess and manage their changing coverage needs is one key for success as an insurance professional. Thank you for taking the time to learn with us here at NSO. We'd love to have you back, so be sure to subscribe and hit the notification bell. You can also follow us on LinkedIn for the latest insurance articles and educational opportunities brought to you by MSO. I'll put the link in the comments.